Hello, this is Dave, and welcome to Equities Story. And this is just obviously general share advice and not personal advice. And Wolfie, before we start, because I want to look at AJ Lucas in the UK, but these inflation rates absolutely ridiculous. 7.3% CPI numbers, the highest since 1990. In 1990, we had interest rates up in the mid-teens, and that's what it took to calm inflation back in that day. How high do our interest rates have to go before we get control of inflation?
I think what we've been saying, and what I've been saying anyway, I think from 3 to probably 6%, I'd say double from where we are right now, to have an impact. I mean, you can see by the retail, and I will go through a couple of retailers actually at the moment. They're still flying along. Everyone's still spending. There's nothing's changing at the moment, Dave. So we're not even close to taming inflation at the moment. And every time we've seen an inflation figure, it surprised to the upside, not the downside, which tells you something, tells you that we're not on top of it yet.
All right. So just looking back in 1990, really what the property market did, and you can see it did have a dip, and we've already had that type of sort of dip already, right? But you can just see it's going to be hard going. But it came back, and it came back fairly quickly back in sort of 1991. I had an email from a client yesterday, and he said, Dave, so far this year, Equities Story's picked the market very, very well. We've sort of back in January, we're saying this market's going to go lower. He was a little bit of surprised with my bullishness this week, and I think I want to sort of emphasize, Wolf, what I'm trying to say. Wasn't trying to say that this market isn't going to go lower, right? I'm not saying that, and I do think it's going to go lower next month, right? I still think we're going to have shocks on the market where we can spike down to 6,500 or even 6,000, yeah. But for me, that the last big spike that we're going to have in November will most probably be pretty quick, and it'll most probably be the last one because of the other issues around the world. Like we believe is that the only place to really put your money is good stories, which over the long term are going to be fairly good, right? Right, yeah, not trendy.
That's what we are.
And that's for the long-term investor, right?
Yep.
So all we're saying is a lot of people in Equity Story are just mostly in cash. We've been telling people to stay in cash. What we're saying is start dribbling a little bit more. And I'm not saying from go to 30% in shares, 70% cash, but maybe 35% or 40% in shares, but still keep cash ready to take advantage when we get the bigger spike down, yeah. But what I'm saying, Wolfie, it's just a time to start looking at some great stories that have been oversold. Yeah. And you're not going to pick the bottom, right? It's impossible. And I think the bottom has got further to go. I do, and maybe that is November, December, whatever. But I think it will be fairly short-lived, and the reason being is that I do believe we're going to have war in Europe. I believe it's going to get a lot worse, and that is going to be very beneficial to the stock markets around the world. Simple. It's a little bit contrary, the view, to what else you're hearing out there, right? But that's how we see it here at the moment. You know, you live and die by your call, but what we're never scared and never ever been frightened to do with Equity Story is make an opinion of the market, right? A lot of people out there predicting the market never do what we do. They'll just talk about what the market is talking about that day. What we've always tried to at Equity Story is look at 2 or 3 months in advance to where we're going to be. And I think over the years we've done that, I'd say, pretty perfectly, right? And our view is, yeah, these markets are going to go low. But if you get those stocks, and some of those stocks maybe had a bad result or just but still a good story and just got overly sold up, then possibly it's an opportunity. Now, it's not a trending market. It's a market for long-term investors looking to accumulate some great stories. That's all we're saying. Obviously, it's not a trending market at all at the moment, Wolf, and it's not really how we like to trade. We like to trade when the market is trending and moving up. but what we're talking about for those long-term investors only. But
Mhm.
yes, I do believe we're still going to spike down lower, and 6,000 could be on the cards in November, and possibly if you look at the Dow, um, possibly we could, that 26,000 is still possibly on the cards, right?
Mhm. Mhm.
Um, all we're talking about is just take advantage of this market if you've got the opportunity with a number of stories, and that's why we put on a number of stories the other day on the SX 200, which actually again all green today and all doing well. So there's a lot of maybe fund managers agreeing with you there, Wolfie, on those stories, right?
I am the fund manager.
All right. Now I want to talk about AJ Lucas, because we put this on as a hot story, a hot stock.
Mhm.
And it would have been a hot stock, but we had the first time in, I think, 700 years that a British Prime Minister was kicked out in record times. Someone who's very pro. It was really the most unforeseen events you could ever imagine politically. But we did warn, we had a stop loss. We said get out of it last week. If you didn't get out of it, just wait, it will bounce. The company has got 18, it is a company with 120 million in revenue. It's got other factors to the company which are good. A lot of very disappointed people today. It'll most probably bounce back up to the 5 cents or 6 cents, and then you get out of it and look for another punt. As we said when we put this out, it's a high risk punt, nothing more. It hasn't come off. Unfortunately, that is trading with some very unforeseen events. But again, Wolf, it just shows the catastrophic UK political scene at the moment.
It's shambles. It's a circus, shambles, mess, whatever you want to name it. That's what it is.
And it's like you said to me the other day, the UK has always been sort of a steadfast, of strong, democratic, stable,
Yeah.
but is this a sign of things to come? This has all come from the issues with pension funds and the bond market. It's put the whole sort of country in disarray, where they want to lower taxes, they want to do really sensible. I thought what Truss was doing was very sensible ideas that she had. But there's so many issues under the surface, so many sort of derivatives, and 1.5 trillion in these derivatives that were basically could have pulled down huge wealth in some of the biggest pension funds in the UK. Is this a start of just more things that we're going to see around the world, more things in Europe, more issues in America? How big are subprime issues do we have under the floorboards around the world?
Well, I think there's a lot of issues going around at the moment. What are there going to be more? Probably. The problem with Europe at the moment is not just the UK. You've got, obviously Ukraine, Russia, which has been affecting whole of Europe. You've had change of government in Italy. That's also probably, maybe it will be a bit interesting to see how that goes. You've got a very not a united Europe either, with Hungary and to some extent Poland and some of the other states. So there is issues there for sure. UK, unfortunately, Dave, from just looking from afar, the political scenery at the moment is just terrible, and I think that just goes around the globe. I think there's a lot of issues with the politicians and the parties globally. I mean, look at US. I mean, it's so divided, it's ridiculous. Almost we're so lucky here in Australia. Nothing's happening. It's all peaceful and quiet. I'm just so glad I'm back in Australia. It's like we're like a little pussycat compared to everything else that's going on. So, yeah, look, globally difficult. And you can see the companies just generally, blaming a lot of things going on. So turmoil. You just have to navigate through it, and hopefully, maybe when we are over this war, maybe things will at least stabilize to some extent, because I think that's causing a lot of problems globally anyway.
Yeah, no, definitely. It's just a crazy world we're living at the moment, and Now, I just want to talk about mineral resources. Wolf, while you're away, we put this on as a trade, yeah,
Mhm.
and this is generally speaking because of they're going to split the assets. Now that trade is still on.
Mhm.
We looked at it today, and it's done really well for us. Wolfie, we're up about 10%.
Mhm.
Maybe more, 15%. The fact the market is going to get a little bit shaky and a little bit dicey, and the fact that maybe mineral resources, if they are going to split their assets, do you think that's going to be imminent, or might it be a?
I don't know. I mean, this is the problem predicting of when companies will announce something regarding some corporate activity, Dave. It's difficult. We know it's on the cards. That's why you put the trade on. Hopefully it happens. Imagine they come back and saying, "No, we had second thoughts. We're not going to do it."
So I think I think in a tough environment out there, it doesn't do any harm at all. Take a profit. I fully understand if people want to hold it, if they've got a longer term view, great. It has moved away from trend. It has done an exhaustion pattern. It's up to 80. There's a few reasons there where you say profit time. So we're going to call that to take a profit, a nice sort of 15% on mineral resources if you got into the trade. So that is definitely a take profits on min.
Okay.
FMG, iron ore, slightly down. And again, the costs are up 3 or 4%.
Yep.
You can see that dividend going down a little bit, Wolf, and I understand people might be holding this as a dividend, but would you be still happy to hold FMG as a dividend, or would you literally just say, okay, I'm in it as a dividend, but you know what? If it breaks trend, if it goes below 15.28, does something extraordinary, then I'm out. Would that be?
I think there's two things that you have to think about here, right? Is you have to probably take a view where you think iron ore will be in the next 2 or 3 years, because that's gonna decide a lot of this dividend, how it's going to play out. In a high iron ore environments, pricing environment, yeah, they're going to be great for a dividend. In a low, in other words, China's not doing that great, we maybe have a recession, then you're probably going to see pressure on the dividends because the cash flows are going to drop down, and you're going to see probably a pressure on NPAT. Now, also, you're going to have a look at the rising costs, which obviously are creeping up. So the margins are shrinking at the moment because the price is going down. So you've got to ask yourself, what are you prepared to take as a dividend out of cycle FMG? Are you happy with 6%, 4%? What through a threshold are you going to go, okay, I think I might find a better, more stable dividend player? So this is the sort of questions you're going to ask yourself, whether this sort of suits your style of investment, because this is going to be volatile. And I'd say the dividend will probably change from maybe for 1 year, you're going to get 10%, 1 year, you're going to might get only 2%. So it depends. Like Dave, I think I'm probably neutral at the moment, and I think probably I agree with you. Hold it for the moment, unless maybe it just drops below that black line.
All right. Thank you, Wolf. ANZ. So the banks had a little bit of a move, and you can see the banks in America actually, Wolf, performing reasonably well. ANZ have put an announcement out today. They're 4% down, which is quite a big drop for a bank.
Yeah.
What's happening?
It's a very good question. They come up with updates, and it seemed reasonably okay, I think. But because we don't follow it, there could be some things in there that the market doesn't like, and down she goes. I think generally speaking, they did make a profit and it grew. So, again, I'm neutral on the banks. Probably the more dividend plays than anything else. So even though you've got a bit of a sell off today, I'd say hold that until it breaks all those trends.
All right. Well, you'd only be in it for a dividend anyway. So
exactly.
So for a dividend, really
Maybe
doesn't matter. As long as it's just going to range trade. I think it's still fine. As if you're in it, if you've got it as a dividend, I still understand that. Right.
Fair enough.
LYC up nearly 5%. So the market liking what they've seen here.
It was a poorish quarter. However, the outlook that sort of looked a little bit better. And when you look at the actual pricing of the rare earths, we had a big spike, right? So I'm just looking at the 5-year chart. Maybe you can put it on the Trading Economics if you can, just so people can see what's actually happening. And it probably it follows the actual share price as well, that sort of chart in a way. So we had a huge spike in 2021 of neodymium. And then we had a 2022, a little bit easing off down to 80,000 and now getting back to 93,000. So it's just one of those things that, you know, you're going to have better quarters than others. I'm still very long-term, very bullish on LYC and yeah, there you go. And rare earths. So for me, this is an opportunity for the long-termers out there to have a look at LYC, because it's probably the best in its class. So if I was with Dave, I was actually thinking about this morning, if I was making a 10 stock mining portfolio, this would be in the top 3, I'd say.
Okay. All right. Brilliant. Thanks, Wolf. And again, you can see the charts had a dip, and it's sort of starting to come, the prices are starting to come back a little bit.
Exactly. So that's going to be probably the catalyst moving forward. Now,
SUL is really looking pretty impressive. I'm going to bring this across. So it's up today, and you can see some of the trading update. What do you make of this, Sir Wolf?
It looks okay, doesn't it? I mean, actually, you know, we can maybe talk about both of them. We can talk about JBH and SUL come up with the updates there, and the retailers are still growing and they're still doing okay. So it tells you, like we just talked about before, that at the moment the interest rate rises have really had not much impact whatsoever. However, both companies are talking about it's getting tougher, right? So with more interest rate rises, you'd expect the retailers to start seeing a bit of an impact on their sales, I'd say. So would I be buying these things? No, I wouldn't, because of that current environment that we are actually have to have, you know, see those interest rates go higher, which is going to impact, I'd say, the spending, right, by the consumer. So for me, neutral to negative, I would not be probably buying them. Maybe hold them for a dividend, but, you know, with a little bit of maybe reluctance, because like I said, I think that there's more risk to the downside than the upside.
It's interesting, and they're paying a massive dividend at the moment, aren't they? SUL, and like you said, that could go lower, but they've got some good companies.
Yeah, they do, and this is why, you know, it's still decent. You know, JB Hi-Fi and SUL still coming up with fairly good sales, and you know, maybe they're not going to be as bad as some of the other retailers out there, but surely they're going to have to be impacted by the interest rate rises, surely.
Yeah, definitely. Wolf, if you're looking and you're only looking for dividends at the moment, how closely are you watching? You know, you're sort of, you've got what, 6-7% on JB Hi-Fi now?
Yeah, it's actually, I gross it up, it's 10%. I'm seeing.
That's not bad.
Yeah,
right?
I mean, this is what, you know, I'm saying is, because the dividend's so high at the moment, I'm still probably going to be holding it nervously until the next update, which says, okay, our sell is deteriorating. Then I'll probably go, okay, I'm out. But for the moment, you'd go, okay, it's still holding on, okay. I might squeeze out half of the good dividends.
Yeah, and I've got the bond rates up here as well, and you can see the UK bond rates have gone down with the new Prime Minister. How high do you think these bond rates could get to if interest rates keep going up?
I don't know, Dave. I mean, again, a question that you can probably come up with any number. Well,
and would that put a little bit of pressure on the JB Hi-Fis and the dividend stocks in our?
You know, look, it's interesting, isn't it? What the effect will be on some of our stocks, tech stocks, or you know, the dividend stocks. Dave, I tell you what, recently I've seen so many things that I thought was going to happen, but opposite happened, that I am sort of like almost in a position of, I want to see it. I want to see the signs of the impacts of some of these things before I make a call, because we know, I can remember we talked about, in a rising interest rate environment, this should happen, this normally happens. We haven't seen those sort of things, which is, this is what the weird thing is. It's almost like a very different times. And yeah, I'm more now of a facts. Give me the black and white figures and facts before I make a comment. I'm just struggling to understand some of the. I mean, I'm expecting. Look, remember we talked about gold, how it should be doing quite well.
Yeah, it did actually all right overnight. So yeah, I think you might see the new crest up a little bit today, and yeah, there you go, up 4%. Having a little bit of a move, and I think while you're away, we put on DEG.
Yeah,
there you go. It's not too.
That's nice. Look at that. That's a good looking chart, that one. So yeah, at least look, I'm glad that they are having a bit of a move.
And your MEK maybe might have helped a little bit of sentiment in that. Yeah, look, it's up 1%. That's chart starting to look nice, Wolf.
Yeah, another couple of basis points, and we're looking pretty good for next week. Nice.
QUB.
Yes. Infrastructure play, an update, reiterating guidance, Dave. I just want to talk about it because it's a big story. And I reckon maybe it could be in the crosshairs of one of these big pension funds out of probably Canada or something, or UK. So look, I've got time for this story. I think it's quite good. It didn't quite make the top 10 list, but it's definitely up the very good defensive.
Thanks, Wolf. And there is a bit of support on this, as we said, around that 250.
Yep.
Now, corporate travel.
Yep.
It's a downturn. So everyone's flying. Everyone I know, apart from me, has been flying around the world doing stuff. Poor old Dave, stuck here having to work while you're
gallivanting around
the world, jet setting as you do, Wolfie. But corporate travel still, really, if you look at the chart, still looks a little bit weak, doesn't it?
It does, but you know what? The update was actually fairly positive. They're talking about if things play out well, FY24, not FY23, to FY24, they'll probably see records and PAT and EPS. So they are seeing definitely improvement, right? And I know, I mean, like I said, I went traveling and I've seen, bookings, and I've seen planes full of people. So I understand exactly where they're coming from because I've seen it with my own eyes. There's a lot of pent up demand of going to traveling. Doesn't matter if there's a war or not war. People want to go and travel. Yeah,
definitely, especially getting out of Ukraine at the moment.
Yeah, well, there you
go. Now NTO.
Yep.
Just having a look here, and I'll bring it across. Not a bad update, Wolf.
Probably one of the better updates I've seen, even though, the company's probably not in that where we want to see it. In other words, with the cash flows, it's still outflows, significant outflows. But remember, there was probably talk of a takeover offer for NTO. So at least from a update point of view, the top line and all those metrics that they look at themselves looks pretty good. So I can see at the very least, maybe holding some sort of a line if there's going to be volatility, right? So yeah, look, not bad. And there is light at the end of the tunnel for NTO.
Right. And do you think it's more likely they're going to be lifting their offer to buy it?
I don't know. I again, that's all speculating whether, how they're going to approach it. We can see a big knockout offer like we've seen for Elmo, or we can see a couple of little nibbles and just to test the waters by one of these private equity firms.
But that's what I'm saying. Is that announcement good enough for you to say, okay, I can't see this going back down below 150?
In a way, yes. You could probably say that, maybe use that 150 as your guide. This announcement is probably good enough to hold at 150. Of course, the caveat is unless the market shit themselves again.
Okay, is this an argument sort of looking to buy something like NTO, like tails, I don't lose too much, heads I win?
Good question. And I think, me speaking with Claude about the current state of the market and how investors are investing at the moment, they prefer companies that are actually profitable and cash flow positive, which this is not. So I'd say no to this, just on that circumstance I just talked about. I'd rather look at something like the next one we're going to talk about, and that's RUL.
Right, so let's have a look at RUL, because superb looking chart. And certainly I think it could have done a little bit better today with that announcement. It's where it was 2 days ago. Certainly looks like it could have another good week next week and maybe retest somewhere around that $2. The chart looks excellent, Wolf.
Yep. The update today, Dave, was reiterate its guidance, first of all. Second of all, it is actually EBITDA positive, 100 million plus revenues, I think 17 million EBITDA. You know, this is the sort of companies that our investors are more interested in than NTOs right now. And that's an unfortunate thing, but that's just the way it is. So we got to abide by it and go, okay, well, I'd rather buy something like a RUL.
All right, well, can you
Good
remind
company,
me?
by the way, good company, I like it.
So, you know, if this is on Einstein's on the weekend, we'll see where it ends up, possibly a trade, right? So I wouldn't really want it to go much higher than that to buy it. I just wanted to try and grab that 5-6% up to $2.
Yep.
Wolf, CXO. So they're down a little bit earlier, had a bit of a move. It's a good looking chart, maybe the better looking out of all the lithium charts that we had on the weekend. But not the best announcement today.
Oh, Dave, what an opportunity. The investors are just so crazy. I mean, okay, they didn't sign their contract with Tesla. What is that the end of the world? What, is Tesla the only buyer of lithium out there? Crazy. What an opportunity. Thank you very much.
Yeah, but Tesla's such a sort of a FOMO story, isn't it? You mentioned Tesla with you, everyone buys a stock. Tesla aren't with you. It kills a little bit of momentum, doesn't it?
Yeah, but I mean, that's.
But it shouldn't be the case.
Exactly, exactly, because you know you've got the Mercedes, the BMWs, the Chinese. They all want lithium for their electric batteries, right? So it's not as if Telstra is the only player that actually go, well, I want to know, I don't want your lithium. Whoop de doo that. I'm sure someone else will buy it.
All right, good.
What an opportunity.
Okay, opportunity in a good story with a good chart, and obviously not too far away from being a producer. What maybe what a year
not that
away?
far away now. Yeah, about 12 months. Yep.
Live tiles. You've got this.
I want to talk about it quickly, Dave, because this is just so frustrating. You feel like going, just wringing the necks, right? So I'll quickly actually bring it out, because I want to just read out something that
aren't they
so annoying that you think to yourself, what are you guys doing?
Aren't they under takeover offer?
Yeah, by BTH, right?
Yeah.
But I mean, honestly, you if you're a shareholder, you'd be going, give me strength. All right, so go down to, there you go. Okay, just leave it there. Okay, so on the 21st of September 2022, LiveTiles announced it was undertaking an extensive operational review to refocus its growth strategy and prioritize profitability to deliver increased shareholder value. This has led to identified annual savings of $6.5 million. What? You're only just doing that now? Saving $6.5 million? You've been losing money hand over fist for like 3-4 years. And now that, you know, you're under pressure, your head is in the sand, you've been smashed by everyone else, you've found $6.5 million of saving. I tell you what, I'd be so bloody angry. I mean, imagine they did this 3 years ago and, you know, save some costs, you'd be 20 million better off in 3 years, Dave. I mean, it's just ridiculous. Honestly, absolutely ridiculous. The management should be all go and get some new people in there.
Yeah, Pauling. Look
at the excesses, and there's 6.5 million of excess really in there.
Well,
what were they doing for the last 5 years?
Well, I'll tell you what, if this does get taken over, I should think they will be out of a job, won't they?
No, God, it's just so frustrating. I tell you, when you're not, obviously their business wasn't run very well, and you know they obviously were spending money on God knows what. But you know, if you can find 6.5 million in savings just like this, you've got issues. Anyway, so that's just quite today. So I apologize for that. But I want to talk about AR9. And I tell you what, this is one of those under the radar little companies it's got a huge future, and the reason why it's in the cybersecurity and that little Cogency, whatever it is that product they've got. And I know they bought another one, I think last year, but they are growing at 100%, Dave. So they're talking about FY23 of cash receipts or say revenues of about 10 mil, right? So going from about 4-5 this financial year to FY23 in about 10 million. So they're going to be, probably slightly cash flow negative. But I love that product because it's now looking to spread its wings overseas. There's been 2 or 3 wins overseas already. We know how important at the moment is cybersecurity. With so many companies are now owning up, we got breached, we've basically lost all your details and it's with the criminals now. I mean, it's ridiculous. So companies like this little...
Well, I can't believe it. I mean, Optus, because I was with Optus, they got leaked. Then I was with Medibank, they got leaked.
Next thing, the Australian government.
There's going to be David Tildesley's popping up everywhere.
Yes. Yeah. I'll be talking to some probably deep fake Tildesley in a moment.
Well, man, very welcome. Very welcome. The more the better.
Yeah, but I really like this little one, right? I'm always looking for companies that are growing strongly, that are looking after their cash flows, and in the right space over a long period of time. This ticks a lot of boxes for me. And yeah, watch this space. I think Cogency could be very, very good over a long period of time.
Right. Okay. If you're in, that's a high risk story, right?
Oh yeah.
A high risk story that could in the future get back to these highs of 40 cents or 30 cents, right? I
think the market cap at the moment is about 30-something million. The only other issue with it, they've only got, I think, 5 million in cash. Possibly they could have another capital raising coming up in the next 6 months.
Right. So I'll tell you what, Wolf, it's one we're going to jump into as soon as we start seeing this trend again.
Absolutely. I think it's one of the better stories out there.
All right. So just having a look, we're taking profits on Min, AJL. Obviously, if you weren't out of it last week, just wait for it to bounce and get out of it. Possibly that AR9, another high risk story, is a sort of one that maybe you could look at if you're looking for another more of a high risk play. JBH, SUL, strong dividend plays, but we wouldn't be buying SUL because we feel the general market is going to go down. LYC, one of the top 3 resource plays. It's still not trending, but if someone's in it with still that long-term point of view, we can understand holding it. ANZ, not the best announcement. It's down, but we're not trending it. These are just dividend plays. And just understand that Fortescue, things are going to get a little bit tougher going forward. You did want to talk about CIA, Wolf, as well, which is another iron ore play. What is your take on them?
Again, you can see everything going backwards. In other words, you've got rising in costs, realized prices are low. I mean, the usual things that we've seen, like FMGs and others, right? So I think that it's coming to a point now where you've got to be very careful with CAA. They don't have much room to wriggle now anymore. Before the margins were so large, they were swimming in cash. Now the cash has shrunk significantly, Dave. So if you look at the cash flows for them and their profits, now it's getting to that stage of any more further falls in iron ore price, and it's going to be marginal. So you've got to be careful with your SCA, and you have to be watching like a hawk iron ore prices. It's still profitable, so that's a good thing. But with time, I think even if iron ore stays the same, the problem is the costs are going to probably keep rising up. So you need to see that iron ore price increasing, which I don't see. That's why I'm sort of a little bit worried in that new term that we might see it a little bit lower.
Well,
however, the only thing that maybe saves it is that production increase, maybe.
Yeah, they've got a big production increase coming, but again, like you said, if the iron ore price keeps falling, well, it's not going to help, is it?
No, it's not. The sentiment is difficult at the moment for them.
So a story like this, it's really your best to get out of it and look for something else, aren't you?
I'd say so. Right now, I'd say better to have that in cash, maybe nibble on some of the other stuff that we've got, right? And come back to this when things settle down, when we see growth return back and you see that iron ore, at least, starting to look a bit more rosier.
All right, on that note, Wolfie, thank you very, very much. And interesting times. And we look forward to talking tomorrow. And we've got live tomorrow as well.
Thanks guys.
Wolfie. Thanks.
Cheers.
Bye.